Welcome to Small Caps, ladies and gentlemen. My name's Kerry Stevenson. Today, I'm bringing him back, Truth Bomb Tony. In times of chaos and craziness in these markets, I thought it was time to bring Tony back, have a conversation. He has been saying for quite some time, and I did lose my bet on it, that the interest rates would go up, the housing prices would go down, the markets were in interesting times, and how the hell do we do all that? I, on the other hand, said, no, everything's fine, Tony. What are you talking about? So luckily, I didn't bet my house on it. I sold my house and gave him a bottle of champagne. Thought that was quite a good bet. Tony, welcome back to Small Caps. Good to see you.
Always good fun, and it's good to get fired up. And there's one thing I've learned being in financial media is don't read the comments. But I can't help myself, Kerry.
Don't read the comments, Tony.
No.
Listen, the comments could be a bot anyway. You know what it's like. We're in a world of social media chaos, and who knows who you're talking to? You could be talking to a machine. In fact, speaking of talking to machines, I would recommend everybody reads the book 1984 again. Oh, there's some truisms there, Tony. Anyway, let's get into what our people would really want to know. How are you navigating these markets? You've said that there's going to be some pain and some hurt. Are we there yet?
No. And the RBA has just punched mortgage holders in the nose, really. Fancy saying plausibly no interest rate hikes. Now we've just had 4 in a row. This is looking absolutely dire. And with the latest 0.5% increase, hey, public, go out and find another $3,000 before tax to maintain your lifestyle. So the RBA, absolutely wrong-footed. There was far too much cheap money around, allowed asset prices to go well above what they should be. And now we are paying for it. It's just been an absolute debt binge. We've gone out and bought stuff we don't need. Unfortunately, Kerry, retail sales figures have been too bloody strong, and this is giving the RBA a reason to lift rates. So maybe if we get our final consumerism binge out of the way, drink copious amounts of alcohol on Melbourne Cup Day, because we'll get a raise that day. And then let's worry about it next year. But I just cannot believe how we're consuming when we're faced with the darkest economic times of our generation, and it's only going to get worse because, inflation is like trying to hold a beach ball down underwater. It's not going to work. What they say, 7.75%, whatever. It doesn't matter, because how the hell are you going to get it back to 2 to 3%? With the supply chain issues, shortages, and what we're going through now. So I think the average mortgage holder that works hard, that doesn't have a deep understanding of financial markets, has been screwed, and we're yet to see any panic selling, mainly in real estate. But if you look across the ditch, those falls are pretty frightening. And in Sydney, they're the fastest in 40 years. So it's going to crash. Adopt the brace position, and it's up to each family to do their best and to maintain some financial well-being. Private schools are going to lose students, streaming services, goodbye. I'm going to be honest. The last month has been the quietest I can remember in about 4 or 5 years for me.
Wow.
Phone calls off a cliff. I was getting between 30, 50, the odd day 100 calls. Now I'd be lucky to get 5. Wow. And most of those are my regular whingers. So my income has dried right up. I'm starting to go into survival mode myself. I don't want to make any stupid purchases. I don't need a new car. I don't need to go out and buy lots of hill figure stuff. The good thing for me is, I love going into survival mode. I might write another book. I might actually get out and market these courses I'm doing. But can you imagine people that don't have access to a second income?
Yeah.
Look, OnlyFans revenue was $4.8 billion. I reckon that's going to skyrocket.
Wow. Yeah, well, and influencers, whatever you want to call them. But I know, Tony, you get really passionate about the fact that it's the everyday Aussie that's going to hurt. And the fact of the matter is, there's not many in terms of percentages that really are, I guess, investor savvy that understand the markets. And that's your passion, isn't it? Is to try to say to people, you need to wake up, you need to stop watching Netflix, is what I say. Don't stop watching Netflix, get yourself educated. But I don't think that's going to happen.
It never does, because I look at it's a ratio. I mean, I've got a fully shaved head, but it's a male pattern bald index that I look at in your conferences, and it hasn't changed. Once it decreases, we actually will see youth at conferences, but all the youth have gone to crypto and they've just become gambling addicts, and they're not going to come to the ASX and become long-term investors. They want instant gratification. If you look on Twitter at a site called Coinfessions, you look at all the tales of woe there. These people are just gambling, and they're gambling their family's money. So what will happen is, the way I see it is, once we have a good old gold and silver bubble, then we'll see an injection of youth. You haven't really seen much of an increase with lithium, green metals. Copper bubbles don't really tend to excite people. I think it has to be just a good old garden variety gold bubble.
Wow. And do you look, you know me, I'm known as that gold lady. I love the precious metals, and we do the Australian Gold Conference. But it's been like walking through treacle, someone said to me today. They said, no one's interested in gold at the moment. It's not doing very much, but it's doing what it should do, which is it's holding its purchasing power.
Exactly. And I use the example that in 1971, 700 ounces of gold would have bought a house, and the same thing now, even an overpriced house, which is the median in Sydney. So it has maintained its purchasing power. Now, what you'll find is it's going to take the mother of all gold discoveries. It might take some more corporate action, but it's all about money flow, Kerry. And once we see a switch out of these tech stocks, out of financials, if institutions start pouring into gold stocks, others in the sector don't want to underperform or miss out. So it'll lift the whole sector. You always got juniors out there drilling. But really, the last mega gold stock bubble was probably back in 1978, 1980. But we have had decent runs. So I think that will get people excited, and it'll bring a whole new wave of people that ultimately are going to get wiped out. Because from my experience in dealing with talking to people for 24 years, is that not many know what they're doing.
Why do you think that is? Is that, and we'll get back to gold in a second, but why do people why are they asleep at the wheel, do you think, Tony?
It's the old adage of meet someone, get married, provide grandkids, get a mortgage, become a debt slave, then end up in a retirement home. I don't think there's been much thinking outside the square, so to speak. Speculators in mining stocks or even green stocks, EV stocks, are the absolute minority. And I've noticed that over the years, my rate of growth for serious investors is extremely slow. Many don't even read the financial review. They're simply not interested. They're into the instant gratification. They're into watching what's hot on Netflix, or the ostrich method of sticking your head in the sand. But the sad thing is, we haven't really had tough economic times since the early 90s, and that's a long time ago. And we haven't had interest rate increase for many years now.
Since 2014, I think, yeah.
Yeah, it just takes so much work to get educated, and I keep learning, and I'm probably right at it. On the weekend, I printed out the share pages from the newspaper, and I attack it with a highlighter. I like to go back to basics, but education, basic financial education in this country or in the world is absolutely minimal. But again, I'm talking to a very smart audience, as I've noticed.
Tony, I do want to just point out the fact, are you doing another financial education course?
I actually just did my second session of one on Sunday. I had managed to get 21 people. I was only after 10, but I will start these on demand. apart from doing financial media, I really suck at marketing. But kindly, one of your viewers, he messaged me and said, "Oh, can I help you with your slides?" And I said, "Great." And finally, I have a product I'm proud of, rather than my crappy PowerPoint. So look, I'll run them on demand. I'm going to rejig my kids, young person's inexperienced course and make it worthwhile, because I'm going to teach those in looking to build their knowledge about stuff you're not going to read in the paper.
Yeah.
How to use precious metals to build wealth, how to use ETFs to protect and build wealth. You're not going to see these courses on the bookshelf in Dymocks or other methods, because I treat speculation and markets as psychological warfare. So yeah, I'll run them on demand. I do them on Sunday nights, but if I can do a little bit of that. And as I mentioned before, this is the quietest I've been in years, so I've only really got to deflect the whinges. And what I've found, Kerry, is that someone's level of anger is all relative to their entry price into a share.
Absolutely. Look, just quickly, if people want to find out more about your financial course, they just send you an email, tony@altocapital.com.au. Is that correct?
Absolutely. And I've noticed that some even just ring me out of the blue now. Ring Alto office. I'm actually going into the office more now. I've worked out that I actually need banter. So yeah, I'm easy to contact, and I'm actually one of those types that sometimes will answer the phone. I'm not like a jar of spam where you have to get through the top to get through. So anyway,
all right.
I'm one that actually answers my phone, Kerry.
So all I'm saying is, for me, it's I'm passionate about educating people as well, Tony.
Yeah.
So guys, if you're a little bit, if you want to get yourself more of an understanding of the market and what's going on, it wouldn't hurt you to do Tony's course. Give it a go. Continue to educate yourself. You can never, ever stop learning. That's my opinion. So do an email to Tony on that. But look, Tony, right now we are. I was watching Professor Simon Michel from the University of Finland talking about the fact that we are moving into this green revolution, this electronic revolution, getting away from fossil fuels, but we can't just switch them off. And his view is that it wasn't really thought through very well. Having said that, that means that ultimately it will be very good for certain resources, and that comes down to resource stocks. For example, 700 million tons of copper has been mined. We need another 700 in the next, and by the way, that's mined up to 2020. We need another 700 million in the next 22 years. So do you like the copper stocks? Do you think even in times of turmoil and when the market is a little bit under the weather, if you like, it's caught itself a cold. It hasn't got COVID yet, but it's got a bit of a cold. Are there certain sectors that you're looking at and thinking there's value there?
I tend to look at the companies cognizant of an overlying theme. So if I look at the copper sector, I've been there. I actually helped Sandfire list. They had that massive discovery. I have been around some other base metal stocks. My zinc stock in Italy was subject to a lowball takeover, so that's a bit of a pain in the ass. But look, I look at the share prices of two copper juniors, in particular Demetallica, code is DRM. So they're trading around 19.5, 20 cents. That's the old Jericho asset that was spun again out of Minotaur. So Minotaur had that issue with Andromeda. So and this is the asset to come out of that. They look great. They're up in the Cloncurry region, 9.3 million tonnes at 1.4% copper. They are working on a resource upgrade. So I've been involved with that management team for many years, and that goes right back to the discovery of Prominent Hill when the old Minotaur found that. So absolute faith in management, great asset. The results are consistent. That Jericho deposit hopefully one day will be mined. The share price of Eagle Mountain Mining code EM2, makes me want to grow my hair back so I can pull it out. So it just really frustrates me, because what's turned into one of my greatest success stories recently, because the stock 10 bag for us, it's just turned into a debacle. I mean, you can buy that stock now for 20 cents. Charlie Bass has been throwing money in. Last time he threw some money in was at 45. We have had some funds selling. Funds went into the last placement. They've been liquidating. That's a copper project in Arizona. They're going to start to drill from the underground, and they have a really exciting exploration project called Oryx, which is in that region, and they're just waiting on approvals. So I don't think you can go too far wrong with those emerging copper juniors. But if you look at the production profiles, Sandfire's come off a bit. The mine life at DeGrussa obviously is waning, so they've looked overseas. Of course, we had Cobre with that discovery. So yeah, very, very focused on copper. And what viewers should know is that if you're in an exploration company that makes a huge discovery, the share price tends to overshoot to the upside, just like Cobre did, 2.1 cents in June to a high of 73 cents a couple of weeks ago. So, I mean, I also look at a highly speculative stock called Copper Search. So they're in the Gawler Craton. It's going to be a while before they drill, but to me, that's a Powerball stock. You're either hero or zero, because when you're drilling 500 meters plus, you're trying to find a discovery. But most of the copper now is 4,000 meters above sea level, less than 1% in South America. So there's going to have to be some new discoveries, Kerry, and fast. And I think to take a project into production now takes years, and you've got to look at all the environmental stuff. You have to make sure there's no rare frogs on the tenement. It's just, but you're absolutely right. On the base metals front, again, nickel, they're saying shortages there. You're looking at what's contained in a EV battery. So yeah, exactly. And uranium's probably going to have another crack. I've noticed that I do cop a lot of flack, because when I said that my clients made 10 times out of the uranium stocks and we're out of them, if this uranium bandwagon comes around again, I'm certainly going to jump on it.
Well, it's interesting. I think that the uranium bandwagon, if you like, is coming because people, like, we are in an energy crisis. No two ways about it. And, all this talk about greenhouse gas emissions and carbon reduction. Well, uranium as a fuel source is carbon zero. So, and also, I don't know if you saw recently, the US government has put a floor on the price of uranium of $50. So if you're mining in the Athabasca, and that includes Canada and the US, they will fill the pipe, if you like, if the price gets below $50, which is pretty interesting.
I wouldn't be surprised if there's a Canadian uranium bubble. And a lot of the mining bubbles in particular, they really begin their life in Canada. So interesting. It could be Canadian driven, but what viewers should realise is that once a bandwagon gets fully revved up, then the valuation on the companies do not make much sense at all. Market caps get well ahead of themselves. But the key with any bandwagon is to know when to leave, when to sell out, and to constantly risk reward. If you've made 10 times on a company that is only producing brokerage and directors' fees, maybe it's time to sell some and move on.
Okay, that's very good advice. And I think the other thing that we need to do a little focus on today, because in times of, I guess, chaos and a little bit of despair, people can be caught out with scams. And I think it's important for us to remind people to be very cautious of people taking their money. There was, you mentioned earlier when we were talking off camera about a Four Corners story, and I just think it's good for people to just be cautious. What's your advice on that?
Yeah, my clients are starting to get scam emails. That Four Corners program was on the Wolf of Warwoy. It was this old gentleman that spoke very well, would go and prey on pensioners saying, I'm floating a mining company. Would you like some 1 cent shares? I'm going to float this at $1. And obviously, if a lot of these people would have been playing lotto for 50 years without success, and suddenly they're faced with a 100-bagger, and luckily four corners cornered him, so to speak. But there's lots of colourful people trying to do that, trying to rip people off. And as financial conditions get tougher, I can see scams making a comeback, along with insurance fraud and cars that burst out in flames and go missing. So, yeah, be careful of these people. If someone rings you out of the blue, offering you the deal of a lifetime, well, why wouldn't they just keep it for themselves? So,
Run.
absolutely be cautious.
Yeah, run. If somebody rings you out of the blue and it sounds too good to be true, it is. Run fast. Tony, what are your final thoughts for this Truth Bomb week that I'm talking to you? What would you suggest people do in these times where, as you said right at the start, the RBA has put the interest rates up by 50 basis points? That will be passed on by the banks. People are going to have to start finding a lot more money and stop buying the widescreen TVs. But for our smart audience out there that are very, very well educated, if you like, what's your 3 comments that you would say that they should be looking at the moment?
Quality small caps. 3 words, because they're all down. I reiterate to my clients and anyone that cares to listen is that I can control the research. I can't control what people do. And at the moment, sentiment is rock bottom in a lot of these companies that have amazing fundamentals, and in 2 to 3 years' time will be worth a shitload more than what they're trading at now, because I've worked out a pattern. From being an advisor for 24 years, I know that a company with good fundamentals and good management always gets there. And, there's always going to be companies that go under, but they normally come back as a lithium company, like one of my biggest failures, which was Diamond X, which came back as Sayona. So, they can make decent comebacks.
Well, as someone said to me today, portfolios are like the Melbourne Cup at the moment. There's a winner in there somewhere.
Yeah, if you've got a Melbourne Cup winner, Kerry, let me know.
Will do, Tony. I'm going to see you back here again in a fortnight's time. But for now, keep doing what you're doing. Keep educating people. And as we said in the middle of this interview, reach out to Tony if you want to get more financially educated about the markets and how to protect and potentially grow your wealth in these challenging times. For now, thanks so much for joining me on Small Caps, Tony.
See you in a fortnight.